Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for March 21st, 2017. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. I've been talking about 2376.5 as being the key pivot to the current range, and that continues to be a major pivot in the charts. You can see yesterday it was the high. This morning price is trading right at it, and it continues to either be resistance or support at various stages, and it tells you that right now the market's just kind of tightly coiled. You can see this recent highs coming across these highs, lows coming in like this. You can see this thing is very tightly coiled. At some point we should see some sort of expansion out of this range, or at least a test at the outer edges, and this outer edge is where much more business can be done, or at least this edge. If price can get out here, it could be a great fade back up. Likewise, if it gets up here, there's either a continuation or a fade back down. But sticking right around this midpoint here makes for very difficult trading decisions because the market's just kind of sitting there. And there's no real edge when it's just chopping in the center of a range. But at least this 76.5 is a key pivot to give us bias. And right now, price is below that zone. It starts to push back up. You'll likely see the bulls take control, and pullbacks will be buying opportunities. Otherwise, staying below it, it could be an attempt to push back toward low. So we'll continue to watch that pivot as we move forward. All right, let's take a look at the intraday time frame. On an intraday basis, you can see here that price basically holding near 5-day VPOC, 5-day VPOC right here around 2375s, 2376s. And price is chopped a little bit above it, now chopping a little below it, and this has been kind of a downtrending move here in the short term. So if there's any failure to get above 76.5 here, again, the expectation is that we could see some sort of short-term weakness into the previous session's low and the LVN here at 2365s. Any push below the low could be an opportunity to look to defend and squeeze back toward value. So right now that's kind of the approach we'll look for here as we head into the rest of the day. All right, let's take a look at crude oil. Here's crude on the intraday. It's trading in a range. You can see from the higher time frame chart that right now we've gotten the bounce that we were expecting, and the previous session what we were looking for was for bulls to defend the 48.42 or as low as 47.90, but this was the first area of support. Came just in front of that level and closed back near the mid of the day. And so far today, the mid has been defended and price is pushed to new highs. But currently speaking, price is being offered above the previous session's high. So right now, we've seen this thing kind of continue higher off of the zone that we were talking about. The expectation is that if 48.42 and especially 47.90 continue to hold, we'll likely see a push into that 51.06. So right now, you'd like to see this thing start to push through 49.70, 49.80 quickly, but we may see another couple of rounds here where 48.40 needs to continue to hold as support for a shot at higher prices. So we'll see how this plays out. On an intraday basis, you'll see right here that we're currently at the top end of a range here. We got this trading range that is built out. Basically, 49.60 to 49.70 is the upper end of the range. Down here you have 48.50 to 48.40 is the lower end of the range, and we're in the upper zone, but not quite the edge. So we could see a little more strength here, and if price comes into the 49.60, 49.70, it could be a short-term rotation back down to value. Any move back into this area is still to be defended by bulls. All right, let's take a look at the NQ. Here's the NQ intraday. It's at the upper end of the range. If we look at the higher time frame, here it is. The higher time frame has been very, very bullish. One level we were talking about was the FOMC level, and we've been talking about it before that day and after that day. And the expectation is if you go bid away from it and you find rejection, you likely come back to it at some point. And once you do come back to it after having been bid initially, you're likely to see bulls to defend it yet again. So that area and into 5,400 was defended, which was our expectation last week and headed into this week. An upside break, a pullback would be defended for a continuation and a retest of 54.40 and perhaps a continuation. We talked about 54.42 being the target. We got to 40. We could see that 42 get completed, and then we could start to push to the upper end to the next target above. The next target will be 54.82s as the next upside target. But overall, remaining above 53.95 and 54 is bullish. If we reject up here, say price comes into 42s, 45s, 50s, and starts to fall back below the 40, that could be an indication that the stops below this recent low at 53.95 could get run, and we could be looking at a move back towards 61s. So there's still a couple of plays here to watch out for if there's a rejection at 54s, but overall the flow is to the upside. Here's a look at the intraday. On an intraday basis, price holding near the upper end of the recent range. We got 53.95s right here, top end of the range 54.40. A little bit of an expanding range that's developed here, so that's the previous session's high. Prices are holding just above it. If there's any failure to hold above the previous session's high, you likely see a rotation back down. So that could be a short-term thing to look for here as we open the session. Are we going to remain above this high? If not, every bull that got here late above that high is going to have their sell stops run below 27s. That'll flush this thing back into the low and VPOC at 54.13 and perhaps to lower prices. So watch for these bulls. Do they get paid or do the stops come out? Lastly, let us look at gold. Here's a look at gold. If you look at the higher time frame gold, we were looking for a push. If prices could not stay below 1205s, we knew the stops would get run into value. We've also completed the key range, right? So we're back and chopping around CVPOC. CVPOC being composite 5-year VPOC 1232.10. Anytime you go from rejection back to value, you tend to sit there for a while. There's no real edge that occurs. That's why as traders we're looking for rejection to return it to value. We're looking for rejection or run of the stops to return to value. And once you get to value, you tend to see price stick there because that's where everybody wants to trade, and that's where market facilitation is. 1 day, 2 days, 3 days, 4 days trading right now, and it's been very sticky. So there's nothing really to do on a swing basis just yet, but one thing I do notice is after the major stop run day, I did say any pullback likely to be a buying opportunity for a continuation higher. Now one thing I do see here is now a rejection of the previous session's lows in an uptrend. That is typically a great buy signal for a continuation to new highs. So if price can close above 1232s today, that could be a great signal that we could be popping higher into 1240, perhaps back to 1248s and 1250. On a lower time frame basis, you'll notice right here, again, the previous session's low is always very, very important. There it is right there. Price came below it, could not seek new lows here, rejected, higher lows came into it, the stops got run above value, now we're marking higher. So I would say 1230 could be a great short-term buying opportunity for a push into 1235 and perhaps to new highs into 1240. All right, that's it for now. Let's see how this plays out heading into the rest of the session. Good luck and trade well.